Hello, my name is Chris Bird, and I'm a certified financial planner and enrolled to practice before the IRS. And I'm going to be coming to Fond du Lac, Wisconsin on June the 9th of 2022 to speak to the Wisconsin NATP Society. And I'm going to be doing a one-day seminar on a variety of topics. Now, Wendy, Bill, and I have been talking about this for 2 years. We've set this up in the last 2 years, and then pandemic hit everyone, so we put it off, and we're going to be doing this live in Fond du Lac on June the 9th. So let me tell you what we're going to do. We're going to be talking about basically 6 or 7 different topics. Wendy has asked me to talk about a combination of the CARES Act, the things that are still ongoing, for example, the qualified improvement property issue. And I will not be taking your time to talk about PPP and EIDL. We kind of think those are past tense issues that don't need to be dealt with in this seminar in 2022. I'll be talking about the ARPA Act, the President Biden American Rescue Plan Act, and even though some of those things were a one-year issue in 21 only, they want to extend them if they ever get the reconciliation bill, otherwise called the Build Back Better bill, together. And we don't know if that's going to happen or when it's going to happen. And finally, Secure Act 1, everyone, which already passed, I believe in 2019 or 2020. And Secure Act 2 is in Washington as we speak, but I'm not going to waste your time talking about what may happen. We'll talk about the Secure Act 1 provisions of extended date for RMD, the 10-year payout for non-spouse beneficiaries, all those little intricate rules where all we know in this business is nothing simple. So we'll go through those rules. Now, the next topic. We'll be talking about a good 60-minute, maybe 75-minute session on what I refer to as tax conundrums. And these are problematic issues that have come up during the last tax season in my own practice. And I always segregate those out just to cover in seminars because it gets people going, it gets people thinking, it gives us the opportunity to maybe have breakout groups for 60 to 75 minutes and have different opinions on how would you handle this situation. And I'll guarantee you'll find them entertaining to some degree and enlightening to another. Now, we all dealt with a new form with respect to S Corporation shareholder stock and debt basis, Form 7203, a brand new form for 2021. Those of you that do the 1040 of the S Corporation shareholder know darn well about that new form. So I'll take you through that, the instructions to it, the little idiosyncrasies, as there always are, how that form may disagree with the IRS regulations on the prioritization of the calculation. We'll talk about that. At the same time, we'll talk about partners outside basis and their partnership interest and the capital accounting. We know things have changed in the last couple of years. More information is on the K1 in the lower left-hand corner. Then, of course, we've got the new K2 and the K3 for 2021, which caught every one of us off guard with the in-depth look that does for partners' foreign investment and income activity. And granted, most of that was put off for 1 year by the IRS because there was such pushback by the tax preparer community. But we do need to talk briefly about the K2 and the K3. And let me tell you what, I hope none of you have to deal with that, but I'm afraid a lot of us will. We'll talk about the new 1099K provisions, which are going to be a problem next January, February, March because of the clients bringing that 1099K in for internet activity for which they never would have received it in prior years. And the reason for this is they've changed the standards and lowered them to a $600 or more criteria, even though there's a bill in Congress to potentially raise the $600 to $5,000. And that's what's needed to prevent a lot of problems for us next tax season. And finally, if we have time, I want to cover the real estate professional rule, something that I'm near and dear to my heart. I do a lot of realtors returns, a lot of people that own rental property. So you got losses. Do you qualify for the total deductibility under the real estate professional rule, or do you fall back to the $25,000 rule? What about the election to aggregate that only a real estate professional can make? Those are the kind of things I want to talk about in that section. So I really want to welcome you to Fond du Lac, Wisconsin, Wisconsin NATP on June the 9th of 2022. See you soon.